What's going on, guys? Thanks for tuning in for this video. I want to get this out to you quickly because NFP data just came out and I went live for this as well. So if you like these type of videos, give me a subscribe and a like as well and share this with another trader, okay? And I want you guys to know, if you want to trade live with me, learning fundamentals as well, I do have a private group, okay? Everything is in the bio if you're interested in the Discord group. Courses included for members, okay? So I just want you guys to know. But let's talk about the data. So this job report definitely was a shock to the markets. It came out at 22,000 jobs added. It was expected for it to come out at 75,000. So this was a huge miss for NFP. Unemployment ticked up to 4.3%, and it's the highest it's been since 2021. Wages is also cooling, right? But here's the kicker. When you favor in that revised numbers for the previous month, that's what really was painting the picture for Wall Street, right? So I'm gonna just break this down for you about the information, the direction of the markets, what happened with dollar, gold, and equities, okay? So NFP was a big miss. The revision is what really tells the story, right? So June was revised to negative 13,000 jobs. That's an actual miss in job loss, okay? And July was revised slightly up, but it was not enough to offset the June revision numbers. So what does this mean? The last 3 months trended is much softer for investors than what they expected, right? So revision tells us the actual picture of the labor market. It's been quite weaker. So the trend of revision, right, the revised numbers, is actually going down. So now we see a sharp down move. So now, when it came to the data coming out, right, I'm gonna talk about the movements, right? But this is why the revised numbers is important, because it's just showing the previous numbers of last month. And right before the data came out, it is not a coincidence that they said that the labor was the BLS, that their websites was down so that people can't actually track the data. Then Hasset just came out and saying that we can't trust their numbers. It's actually better than what they expect. So we got a lot of noise when it's coming to the labor markets, all right? But here's market reactions. So dollar got destroyed, really dropping down 1% across the board in all dollar pairs. We took advantage of USD JPY sales. I hope you guys really took advantage of that too. But gold hit record highs, right? So gold pushing above around what was like $36, right? That's insane, 3,600. Sorry for gold. Good job for you guys that took advantage of those gold buys. Equities like the S&P 500, NASDAQ, and also the Dow hit record highs as well. It hit record highs as well because of the chance of a Fed cut, right? So the yields that really paints the story about where interest rates is going to go, the US 10 yield also pushed lower too. So now let me talk about equities, because when you actually get this video, equities did push lower after the print. And this is where it matters about the revision, right? The revised numbers, is because the trend now of economic data, like when they show that the labor markets was actually higher for that print, and then a month passed, and then we go back and see that number was actually lower, this is where the markets is like, oh, wow, the labor markets is actually worse than what we expect. So this is what gives a recessionary fear, which is causing a risk-off market. So this is why equities after the data, once all the information is clear, now they have a bigger picture about what's really going on. And then that's why we see that the stock markets are dropping, okay? Because it's giving recessionary fears. Because now when we're looking at the Federal Reserve, what are they gonna do next? If they're cutting rates in spite of recession fears, that's actually bad for the stock market. Even though cutting rates should be good for stocks, yes. But if they're cutting interest rates because they're afraid of recession, that is also bad for the stock market. So this is more the information that we need moving forward. But for now, that's clearly painting a picture. When you see the video and the stocks dropped and you're gonna like, oh, why did equities drop? That's why, okay? But why all of this matter, right? This is the classic bad news is also good, right? Just as talking about the reaction that we had from the data, all right? So we don't confuse the two. So from the data, bad news is good. The Fed is now concerned soft jobs and higher unemployment means that the path to rate cuts, even the revision proves that it wasn't one offset, that they're building for months, right? So they already expected this to happen. So this is why like the stocks rise when the print happened, because when we saw the initial data, it didn't give us that like, oh crap, like damn, the markets is really bad than what we expect. It didn't give us that. It gave us that the fact, okay, it's bad news, but this is still good for the stock market because this means that it could cut rates, right? So I actually went live for this and I explained everything, okay? And this is what helps you guys create a bias and understanding. So if you guys are interested in more in this information, please just reach out if you're confused. And I understand that it takes time to understand this type of information, but if you have somebody to actually help you, take advantage of it. Join the live calls, join the private group, go over the course. You have all the information that you need. It doesn't matter about how you trade your technicals. As you can see, if you just watch the live call, that no matter where you entered, you could have profited from this if you understood what was going on, right? So now moving forward, right, we're gonna have to pay attention to more economic data. Like next week, we're gonna have CPI. If that comes in lower, we're gonna expect weaker dollar, stronger equities, right? But if we see that the markets now is looking at, right, this is my news terminal. If we see that the markets now is expecting recessionary fears, right, we're probably gonna see equities continue to push lower. But still, it's still a high chance that the markets could still look at those numbers and say, okay, they're bad, but it's not signaling recession. And we could still see equities push higher despite that push lower, right? So just be cautious when you take price action. Hopefully this video helps you guys. And if, again, do not hesitate to reach out. I'm here for you guys.